Good afternoon and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha Darad, and joining my colleague Yatin Mota. Yatin, second straight day of gains today for the markets, and the picture completely reversed after 1 p.m. today. So from timid Thursday where we started out to be, we turned out to be a very terrific one as well. We saw that the Sensex closed about 1200 points gain, and Nifty too ended above that 25,000 mark as well. It even breached 25,100 mark, the first time in 7 months that the markets have seen. So all in all, good set of gains which was seen across the sectoral board. Auto, Realty, Metal, they were the standout performers today, and India Wix also cooled off. Yatin, like last 2 days when broader markets were leading, it was the large caps that drove the markets higher today.
Absolutely. Now, if you look at the Sensex, 1200 points gain coming in, Nifty also nearly 400 points move. Terrific Thursday, if I may put it so, and the Nifty closing about the 25,000 mark. Now, there is a lot of psychological, momentum in the markets. We had the trade war issues, India-Pakistan tensions, a lot of events in the last 3-4 months ever since President Trump has assumed office in the US Oval. Now, if you look at the market setup, it was extremely light, positioning was quite low, and given the fact that now there have been data points in the marketplace which indicate that a multi-year high cash level is seen with the mutual funds. Eventually they will have to come and deploy, and probably the markets are now sensing that with events behind, now the equity inflows as well as the mutual fund deployment would start leading to a great rally. So clearly first half was quite soft, and suddenly after 2 o'clock we saw that expiry effect typically playing up with a Nifty momentum above the 25,000 mark. And mind you, after a span of nearly 130, 140 trading sessions, we have reclaimed that 25,000 mark.
That's right. So kind of good day for the markets today as well. And if you look at across the board, it was an across the board gains that came in today's market as well. Now let's take a look at some of the top gainers and losers at this point of time. Moto Corp, one of the top Nifty 50 gainers, up about 6% or so. The street is betting on the rural recovery and new launches to drive up gains as well. So Moto Corp doing well in today's trading session. The entire auto pack was also buzzing. So as a result, we can see some of the auto players also cropping up in the Nifty 50 gainers list. Tata Motors also doing well after yesterday's lag with about a 4% gains or so. Other than that, we can see JSW Steel, some of the metal counters doing well, 4.9% gains coming in for JSW Steel. Other than that, we can see Trent and HCL Tech also in the Nifty 50 gainers list. Only one losers at this point of time, Indusind Bank, with about flat in the red, which is coming in. We had some reports which came up where the company has initiated some more internal audit at this point of time. So the market could be weighing in on that, and we can see that the sentiment is on the weak side for Indusind Bank as well. Other than that, mid caps and small cap indices today also they have exhibited strength, comparatively lower than what it was from the last 2 sessions. However, today also mid caps have eked out about 0.5% gains or so, and small caps with about nearly 1% gain. Yatin, what are you gathering from the broader end of the markets?
So, Lovisha, if you look at the broader end of the market, clearly the advanced decline ratio 3:1. Good gains, almost more than 0.5% for the mid cap and small cap index. Now, if you look at the gainers, Kirloskar Engines post the quarterly numbers, that stock shot up nearly 18% in trade. What was also doing well is the likes of KC International, Kajaria Ceramics, 7-8% higher for those stocks. RK Forgings, Kochi Shipyard, Himachal Futuristics, Zen Technologies, Raymond, as well as JBM Auto, all of these stocks witnessing gains of over 5%. So Nifty 500, a lot of movers. What was not doing well is the likes of Muthoot Finance. Now the counter was down nearly 7% in trade, and we'll talk about this in detail. Newland Labs and PPL Pharma were the other stocks which moved down nearly 4% post the numbers.
Okay, all right. Now let's also break down some of the stocks which did grab limelight in today's trading session. First up is your Eicher Motors. The stock did end with about 0.6% gains or so, but in the intraday we saw that the stock did shot up as much as 2% or so. This came after the company reported a relatively good performance. They did see double-digit growth in net profit and revenue, but margins were a key miss. Now the figures weren't that market moving, but brokerages did maintain a buy on the counter at this point of time. So yes, it was the volumes that the street did bet on going ahead. Royal Enfield, its premium bikes saw good volumes during the quarter as well. 24% Y-on-Y uptick at a time when the industry is just growing by 3% or so. So now what brokerages are saying right now, that is your City has maintained its buy call on the counter and have shared a target price of about 6,050 rupees per share. They believe that the demand would be good going ahead as the management expects tax cuts to help with the urban demand this year. On the other hand, another brokerage firm, which is your Morgan Stanley, have also shared an underweight rating on the counter and have raised the target price to about 4,079 rupees per share. Now, what Morgan Stanley believes is that the company's priority on growth over margins is a correct strategy, which is going forward into the FY26 as well. Yatin, if you look at today, Eicher Motors relatively, with slim gains, it did end, but the company is betting on its new product launches and continuing volume growth from Royal Enfield as well. How do you view this counter?
So I think so far Royal Enfield has been a great volume maker. In fact, Q4 saw Eicher Motors do record numbers. Obviously, the commercial vehicle segment remains slightly softer, and the quarterly numbers are still marred by one-off inventory losses as well as other adjustments. So I think numbers were slightly mixed for Eicher Motors, but I think with the markets moving higher, stocks like Hero MotoCorp, Bajaj, the two-wheeler space did well in trade. But overall, I believe that all of these stocks, if the outlook of the markets is stronger, they wouldn't correct much.
Okay, all right. Let's take another stock in focus, that is your Jubilant FoodWorks. The stock was down, it slipped about as much as 2%, however ended with about a % cut after the company posted a sharp loss in its March quarter earnings shows as well. We saw in Q4 that the profit dropped about 49% year on year and revenue rose about 33% year on year. Gross margin saw a severe contraction due to change in the product mix, but EBITDA margins were fairly better. Now, despite this, brokerages continue to hike their target price on the counter as they believe that there is more room for growth going ahead. If you look at Goldman Sachs, they maintained their neutral call and they hiked the target price as well. They believe that the EBITDA margins, which have started to trend upwards as operating leverage begins to take effect, that's a good positive which is coming on the counter. On the other hand, Citi also maintained a buy call on the counter and have increased their target price to about 805 rupees per share. They believe that like-for-like sales growth is continuing to outperform other QSR players, and this suggests that a potential re-rating could be on the way for Jubilant FoodWorks. Yatin, despite a muted performance, brokerages largely remain bullish on the counter. And earlier too, if we see, QSR space had gathered quite a buzz following the tax cuts as well. So Jubilant FoodWorks, despite the muted Q4 performance, brokerages are believing the FY26 could be better.
FY26 could be better, Lovisha, and I think the management also guided for a 200 basis points or a 2 percentage point margin improvement over the next few financial years. But I think the stock was under pressure because the losses from the Turkey operations, were quite higher than expectations, and obviously there is, post the India-Pakistan tensions, there is, anti-Turkey sentiment which is going on in the markets as well. So overall, that didn't do well for Jubilant FoodWorks in terms of news flow. That stock ended almost 1.5% lower in trade. But Lovisha, I would like to also talk about Muthoot Finance. Now the stock corrected nearly 7% in this kind of a bull market because there were various concerns. Number one is the gold loan business, wherein the AUM growth guidance was given by the management around 15%, which was almost 40% in FY25. So management being conservative, market probably thought that this is slightly softer AUM guidance. Number two is the kind of traction that we were looking at in gold prices, that has slightly fizzled off. With higher gold prices, probably they have a better LTV. The typical gold loan business also booms when the gold prices are higher, history suggests. With gold prices correcting, probably there is a lot of issue with respect to growth in the near future, according to analysts. MFI business, there the asset quality deteriorated, and it is at a multi-year high in terms of bad loan formation, and also with competition increasing from private banks, the gold loan business growth would slightly decelerate versus what it used to be historically. So with all of these concerns, Muthoot Finance corrected almost 7% in trade.
Okay, all right. Muthoot Finance, that is a stock that we need to watch out for as well. Now, let's take another stocks in focus. Now, this pack was buzzing in the trade today throughout the session. That was your cement stocks were on a roll. We saw that Shree Cements did report its Q4 results as well. So that was buzzing on back of that. Other than that, JK Cement, Dalmia Bharat, all of them hit their respective 52-week highs as well. So that came on the positive, upbeat cement demand, which is what the street is betting on at this point of time. So far, if we look at the company's earnings, they have reported a fairly good operating performance, especially on a sequential basis. If we look at, for instance, Shree Cements, that reported about 46% sequential surge in EBITDA, which was backed by strong pricing and operational efficiency also. Even PAT more than doubled on a Q1Q basis, and total cement and clinker sales volumes reached the highest ever quarterly volumes that the company has seen. Even last week, if you look at Birla Corporation's numbers, they had reported good set of figures, and the stock also had rallied to about 20% upper circuit. We saw that the EBITDA had doubled on a sequential basis, backed on better volumes as well. So a pickup in demand and improving prices is what is helping cement companies drive better performance at this point of time. Yeah, then if we look at, earlier UBS had also upgraded several of the counters, betting on healthy demand, good realizations going ahead, and of course the government's infrastructure push, which is going on. So there could be good bets in a rising market going forward.
I think, Lovisha, a lot of things for cement now will depend on pricing. Obviously, with respect to demand, most of these companies have been of the view that 7 to 8% GDP growth, along with some outperformance, could be possible. So if you look at guidance-wise, I think Ultratech as well as Ambuja Cement have guided for a good growth in FY26. Shree Cement also, I think, is one of the top leading producer of low-cost cement in India, and probably they have a cost advantage along with some pricing benefits. So let's see how really does the infra story picks up. But yes, cement as a sector, the growth probably would be slightly better than the GDP growth on a nominal basis.
All right. All right, with that we have to come to an end of this edition of Closing Bell. So far this week markets have risen 3 out of 4 days, so that's a good sign that is coming in. But with that, we'll leave you to that. Thank you for watching. It's a wrap from Yatin and me.